All right, team, we are back for After Hours, the last After Hours of this year, and we are going to make it a great one for you guys. We're going to get into some great topics for you newcomers and people that have been in the crypto industry for a long time. We're going to be discussing today, Matt, our performance in this bull run. We haven't gotten through the bull run all the way through yet. And a lot of times at the end of the year, people want to talk about what they did this year. We don't, mark that time out. We look at the bear market low, and we're going to be looking at, okay, what has happened thus far, all right? And we're going to see how well we got to those lows. This is something me and Matt were looking at before the show here. It's very interesting to see because sometimes, Matty, when you're building a new position, you're able to just like with Zcash or like with me with hbar, I was able to just, throw at it and just nail it or almost get right at the bottom there. And that just happens when you're building a new portfolio. You're able to like nail the bottom. And we were talking about with you with XRP, you were able to, over multiple cycles, to establish a great XRP position. And so that's something I envy you on, but it's like, hey, I did the best I could for this bull market or this bear market. How are you feeling about your portfolio rounding out the end of 2024 here?
Oh, I feel fucking great about my portfolio, if I'm being honest, mate. It's honestly, when I look at like the overall performance of some of the assets, especially that people were just so bearish on because of what was happening in the moment, whether it be Zcash, whether it be XRP from the fundamental catalyst, I love to see the performance of where we're at now. Now, again, we're seeing some nice corrections across the board, and I know that this is a very normal and healthy part of the market, but just to see kind of from this first extensions that we've seen in the market after kind of seeing that first bounce in March of this year, seeing that the bear market was over and that we weren't setting new lows. We saw some of those higher levels taken out and then coming back and seeing some double bottoms in the altcoin market. And now we're seeing some of those extensions in hbar and XRP and XLM. It's really, really wonderful to see. So I feel good about my portfolio, and I'm glad that we're also just getting started here and that there's a lot more life left in this market.
Absolutely, Matt, because people throughout this year, I know I bring this up a lot, but it is, when you are a crypto channel and people are constantly in the comments saying, oh, your assets aren't right. Why aren't you investing in Solana or Render? And we sit back and we're like, hey, we're actually going to invest in XRP and HBAR, and you guys tell us we're wrong. Well, if you guys really want to, mitigate it to that on why we're wrong and why your portfolio ran first. Guys, XRP, the best performer, one of the best performers in the crypto market this year, all right? If you're looking at your Render, if you're looking at your Solana 91% year to date. If you're looking at BNB, 134% year to date, all right? Your Bitcoin, 123% year to date. And then you have our XRP and HBAR, 283% and 273%. Some of the best performing assets in the crypto market we invested in, right? So there is no, hey, you guys chose the wrong assets. It's like, hey, we got in when we saw the opportunity on some of these assets. We weren't buying Bitcoin, we weren't buying Solana, we weren't buying Render, but we did go in on particular assets like XRP, like HBAR, like Zcash, and we are now reaping those benefits. And the bull run isn't over. That's what everyone, Maddie, I like how everyone says that. They like to put their timeline predictions on, but the bull run isn't over. And in our world, that's when we consider it over, right? When you bought the bear market and you go into the bull market and you take profits at 1, 2, 3, then we decide whose strategy was better, right? We don't decide whose strategy is better in December of 2024, right? When we know we have a big 2025 coming up, a lot of bullish sentiment there, and we are going to see that, altcoin season, we're going to see that continuation of the crypto market, right, Matt?
Right. I think one of the things that we haven't seen yet is a completion in the rise of Bitcoin dominance. And I think that's the main puzzle piece that a lot of people are not paying attention to. They're looking at timelines. They're looking at timeline predictions. They're looking at again, 2 cycles of altcoins that we pretty much have to look back on. And people are trying to pin up a very hard timeline on these 2 cycles. And, that's really not how markets work. You really can't say, well, we've seen 2 examples of this in history, so the probabilities are in our favor of we will have this exact amount of time in this bull market. The fact that we're seeing, the recovery and dominance, the fact that we're seeing the correction after these big legs up over in the altcoin market points to a normal and healthy bull run. So I think we've got plenty of time left in this market. I think a lot of alts have yet to really show their colors and really spread their wings to their full potential yet. So I'm very excited for the rest of this cycle. So if a lot of you guys, saw the initial candles kick off and you're like, damn, I missed it. You didn't. All right. You didn't miss it. There's always a higher low to buy. Use this opportunity to buy some of those higher lows. So I know we're going to be taking a look at some numbers today and some figures. And you're going to say, hey, damn, well, I didn't get that entry. So the entry's gone. Yep, that entry is gone. But it doesn't mean there aren't higher lows for you guys to buy. So I'm excited for some of you guys who are getting involved in this market now, there's still an opportunity for you guys to do this correctly and to be a responsible participant in the market. You don't have to go chase peanut. You guys don't have to chase Haktua coin or butthole coin, which is unfortunately a thing now. Like, you don't have to chase those things. There are legitimate gains to be had in the altcoin market without sacrificing the integrity of your portfolio.
Absolutely, Maddie, and that's why the team here needs to be a part of the CryptoCharged community. Click the pin link down below, team. It will take you to the website, CryptoCharged.com, where you get the daily shows, the tools, and you have access to the community so that if you're left alone, if you don't have family that's in crypto, if you don't have friends that's in crypto, you're probably out there and you don't have people really, enforcing you. Like these past couple months, some of my friends have been on me to be like, hey, are we allocating into the market? What are we doing? And I got to tell them, it's like, I got money going everywhere. It's like, stop. Is it helping your net worth? No, it needs to go into crypto. And it's like, that's the kind of motivation you need sometimes, team. And you'll get that at CryptoCharged. So do that, kind of rounding off December here, Maddie. We are seeing some corrective behavior in the stock market. NASDAQ, Dow Jones down like 5.7% this month. And so we're seeing some corrective behavior in the stock market. We are seeing really corrective behavior in all risk on markets, even risk off markets like gold and silver. So whatever you put your money in this month, you're probably not feeling that well. It was really a month of, taking your money and being willing to enter the market in some points like we were talking about. I know a lot of people that were trying to get into MicroStrategy even as early as, the first week of December. And MicroStrategy in the last 2 years is up over 1,000%, Maddie. It's just crazy that you would try to get in on an asset like that at the beginning of December. Just for the end of December, MicroStrategy is down 20%. So it's like these corrective moves happen and you need to be ready on the sidelines with capital in order to enter, right? MicroStrategy is the stock pick of the year, maybe the stock pick of the last 2 years, definitely. And so if you just have sideline capital and you're ready to go and enter the market in stocks or crypto or whatever, that's going to be much more helpful than you buying an asset that keeps going up in price, not waiting for any pullback. So I just wanted to count that out because some people were like, oh, MicroStrategy's off the chain. It's like a proxy Bitcoin exposure. And it's like, it just corrected 20% this month. You could have got in on a pullback. So always be ready for that, team. Correction in the crypto markets this month. I really think we beat the head on the drum there. So December is a month of you taking your money and entering in the market. I said something like one of the last shows in November. I was like, hey, in December, API 3, count me on it. And I did give a little, rounded out my thesis there. And I was like, hey, we don't do timeline predictions. We could see this January. I know a lot of people are ready for a new president. And so people are hoping that on Inauguration Day, crypto prices pumping. We don't know for sure. We're going to see correction, right, Maddie? We can never just pin it down to a date. And so that's why, team. Hey, listen, I don't have a crystal ball. Maddie doesn't have a crystal ball. There is no mirror on the wall. Who's the fairest altcoin of them all? We are just ready to go when we see value zones, right, Matt? And so that's all there is to it. Before we get into the news for today, Maddie, is there anything you want to share with the team as we got some high quality news pieces of today before we get into our end of the show where we're going to be discussing how well we performed in the bear market?
Yeah, just want to make sure that you guys know that it is going to be the last couple days here to get the 50% off deal for CryptoCharged. Obviously, economy moves on, inflation moves on, and we can't charge the prices we charge forever. So if you guys are interested in getting those discounted prices of either $4.99 for the year or $50 a month, use code YouTube at checkout for that 50% off. Again, in January, we'll still have a discount for you guys, but it will not be a 50% discount. So make sure you guys capitalize on that. And we really want to make sure that you guys are locked in. You guys can keep those prices as well. So want to make sure that you guys are taking advantage of an educational opportunity that's actually going to breed you guys some great rewards if you utilize those tools, right? You can buy the textbook. If you don't read the textbook and study the textbook and highlight the textbook, it's just a textbook, right? So make sure that you guys understand that as well, that this is a tool, and if you don't employ the tool, it will be worthless.
Yes, Maddie. And kind of just leading into our news article here, I guess our opposition at CryptoCharged is easy ways to buy digital assets like Bitcoin or Ethereum or, what I'm leading into here is the spot Bitcoin ETFs, the spot Ethereum ETFs, and we are awaiting spot XRP ETFs, Solana ETFs. And so that is our opposition here, where with these ETFs, you're easily able to buy within your brokerage account. And there are some things like if you come from our world, you're not going to like. You don't hold the underlying asset. There's some extra fees there. You can't just do whatever you want with it. You have to buy and sell within your brokerage account.
Right.
And so what we're going to be talking about today is something like if you're a CryptoCharged member, you know Dan and Maddie have been big proponents of the spot Bitcoin ETFs, the spot Ethereum ETFs, as they add exposure. They allow exposure for your traditional everyday investor, your 83-year-old grandpa, to easily go within his brokerage account and buy an exposure to Bitcoin, right? So this is what we're talking about today. Bloomberg reports BlackRock's Bitcoin fund became the greatest launch in ETF history. As I said before, it's just a different way to gain exposure to Bitcoin. If you talk to Bitcoin maxis, Maddie, they'll be like, don't do that, blah, blah, blah. But it's like, we're just investors over here. So we're like, hey, this is a good thing. I'm glad if people are going to utilize this tool, I'm glad this helps us overall. And, ETFs are simple. You get them through their brokerage account, and you don't have to have any knowledge that we teach over here about wallets, about your private keys, exchanges, all that good stuff, where you can hold your crypto within your ledger. You just go within your brokerage account and you buy it just like any other asset. And you have investor protections. You don't have to worry about exchange hacks or losing your keys. You have simple tax efforts. Something that we don't like about it is you don't get to hold the underlying asset. And so you don't get to control your BTC. You don't have the private keys. And I love talking with older people about this, Matt, like my grandparents. When I show them, like I bought, my brother a wallet, a ledger. I bought him a ledger, Nano S, and one of my boys got me this Flex, and showing this to them is like, oh, what is that for? And it's like a nightmare to explain to them because they could just never understand. You got to start with, okay, how are they, how does their bank hold their money? You got to start there and you got to work it towards like, right. Hey, I'm holding my private keys on this device. No one else has access outside of this device, right? Or outside of my 24 seed phrase, right? And so last 2 weeks, BlackRock said up to 2% Bitcoin allocation is a reasonable range for your investment portfolio. And I wanted to throw this to you, Maddie, because, we're obviously within crypto education sphere. What is a reasonable percentage to allocate into crypto?
2% is just an odd blanket number to toss out. I mean, I'm going to guess that you're maybe talking to an investor who's probably above the age of maybe 40, 45 years old that maybe has other liabilities. And, there's a lot of things that factor into how much exposure you can have in a risk on asset like cryptocurrency, whether it be Bitcoin or another asset. Now, of course, volatility with Bitcoin is going to be less than some like a smaller capitalization altcoin, but 2% is probably a little on the light side, I think, for a lot of people. Now, 2% specifically for Bitcoin might not be light, right? If you're going to be adding other ETFs into your portfolio, maybe you add ETH and XRP and some others, right? And now you have a blended approach and total exposure is 5, 7, 10%. I think that's probably a very good amount of exposure. I think that also we have to look through the lens of if you are going to be treating these ETFs the same way that you treat the rest of your portfolio, which for a lot of people is, I work for 25, 35, 45 years and I make a monthly contribution to S&P, Dow Jones, whatever, and I don't ever borrow against it, and this is going to be part of my retirement. It's not really relevant, right? The volatility to them is not so much relevant because they're not doing anything with those portfolios until retirement. So I think for a lot of people, they could have a much higher exposure, especially if you're a younger person without massive revolving debts, without other massive liabilities in your life, to have a higher level of exposure. But again, I think that also you're probably in the category of people that don't need to buy the ETF. You're probably equipped enough because you've been around technology long enough in your life to have custody in even just a simple exchange like Coinbase, Kraken, and obviously even moving into self-custody. So two probably on the low side, and again they're probably looking at what the average person has exposure to in like tech stocks, whether it be like Nvidia, AMD, or other like semiconductor ETFs, and they're like, okay, well this person probably has like the average risk appetite for like a 2% Bitcoin exposure. But again, it all comes down to like your timelines, your appetite for volatility, and your overall like just age in the market, right? Like that's going to make a big impact on like your decision making there, because you look at how financial advisors will shift your portfolio, and as you're younger you're going to have more stocks and less bonds, and as you get older they're going to continuously shift into bonds to kind of like make more of that money risk off but still let a little bit of your money run, right? And that's kind of just depends on like idealistically you're not dying until like you're 70 or 80. So it's all a game of probabilities, right? And I guess this is really geared towards like maybe a little bit more of like a risk off, hands off older investor for like a 2% exposure.
Matt, I love how far we've come from where, these digital assets were funny money. So that means a 0% allocation into your portfolio. And then last bull run, it was like, okay, 1%. 1%'s a reasonable amount to allocate to Bitcoin and other digital assets. And now this bull run, 2% is a reasonable amount to allocate into crypto. It's like, team, if you're not getting the picture here, it's like it's going to keep going up every single bull run. Next bull run, it's going to be 5. The bull run after that's going to be 10. After
Right.
that's going to be like, hey, I wouldn't invest in the S&P. I would just buy all Bitcoin. I would buy all XRP. It's like, that's what it's leading up to, right? So if you're not catching the trends, you're not really aware right now. Let's get into some brief tax stuff. We don't like talking about taxes, but we're a crypto channel, and we're going to briefly discuss it. Quick little caveat here. If you don't have a CPA, get a CPA. This is what I do. Me and my pops go down to Newport Beach every single year. I already have it scheduled for next year. And I know he goes on his coin tracker and he pulls from all of his exchanges. And you can just take the document and hand it over to your CPA. And then you game plan with what you're doing. We don't get to game plan with you. I don't think you can book a call with Maddie where he's going to sit there with you and be like, all right, now, Gavin, what are your goals for this year? Let's talk about how we should, tax out your crypto, what you should do. I have not gone to my CPA and let him know I have taxes, all right? So maybe that happens in 2025, maybe it happens in 2026, but all I know is, team, you shouldn't be getting that from online sources. You need to go in with a professional and have them break that down for you.
Right.
But some basic things here. Let's talk about a taxable event. What is a taxable event? Swaps, trades, those are events where you have to be showing that to the IRS, right, Matt? Could you quickly break down why, like the basics for your crypto taxes here? I know you don't really want, you were telling me before the show, I was like, dude, this is why I don't even like talking about it. But what are some challenges for investors and maybe some year-end strategies as it relates to crypto taxes?
Sure. So obviously, like Gavin said at the top, for all of your tax questions, please spend the money on a CPA, spend the money on, a crypto tax professional to help you at least maybe prepare the tax side of things, even if you're going to do your own taxes for the rest of it. Reach out to our boys at Daring Advisors, reach out for a quote on Count on Sheep, right? And again, it's going to cost some money, but at the end of the day, if you have a lot of transactions and you made a meaningful amount of money this cycle, it's probably worth just having someone to do it correctly and also helping you kind of identify, for example, like staking rewards, the fair value of that. If there's a lot of volatility, right? There's a ways to potentially adjust cost basis without, let's say tax fraud, right? And they can, utilize the IRS rules there. So let's talk about a taxable event though. So taxable event is a swap of any kind when we're trading one piece of property, whether it be a digital asset or other, for another piece of property, and there is, a gain to be had. Now, of course, some of you guys are gonna be like, well, in real estate, we're 1031 exchange. That's not what we're talking about here. When you take Bitcoin and you swap it for ETH, and there was a profit to be had, you have a taxable responsibility there. If you swapped XRP for another asset on an exchange that's not in the US, that is still technically a taxable event. Although, again, there's the whole mess of, are we gonna get caught, blah, 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 right? It doesn't matter. It is still a taxable event. If I take my Bitcoin and I go swap it for a Lamborghini, and I had a profit, that is still a taxable event. Okay. So at the end of the day, I know that the IRS has the ability to audit 3.2% of the US population. But this is also blockchain, guys, right? Like it's a public network where they can go back and they can look through stuff. We actually just saw somebody who was an early Bitcoin investor who, inflated their cost basis and, has now been sentenced to 4 years in prison for, essentially tax evasion, right? So again, I don't want that to happen to any of you guys, especially if you make meaningful amounts of money. I hate the government. I hate taxes. I think they're unconstitutional. I think they're actually quite frankly illegal. But that doesn't, change the fact that if they want their money, they're going to come take it, right? And eventually, as the IRS builds up, their resources and we start to have, crypto forensics, they can go back up to 7 years and come clap your ass, right? So don't end up in jail, especially when you make a life-changing amount of money. Work with tax professionals, help them, mitigate whatever they possibly can. And pay your fucking taxes, guys. That's really all it comes down to, unfortunately. I know everyone wants to try to mitigate. There is obviously tax segregation with real estate and some other strategies you can look at. But at the end of the day, if you guys just want the cash money, you're just going to have to pay the taxes.
I love that, Maddie. Let's get into the back half of the show where we are discussing our performance, the CryptoCharged portfolio performance so far this bull run. And I think Maddie was, echoing some things I agree with. And I'm very happy with my crypto investing in the bear market. I was in college and I was not skipping a single paycheck. I was not skipping a single time. I was getting big clumps of money, birthdays, anything. It was going directly into crypto. I have slacked off. I will be the first one to admit it. I have slacked off in Q4. I had other avenues I had to invest in as a young adult, but I'm still going to 2025, still going to be taking that money and setting it aside. If I'm not investing in the market, it's going to be sidelined for cash. And I think we really are going to demonstrate here, Maddie, that we walked it like we talked it here. And that's all everyone needs to see here, right? We come on with these shows every single week and we can break down the news, we can break down whatever, but if we're not in the market, they won't take us as seriously, right?
Right.
And so we're going to show them performance and what we've done this bull run. I'll quickly go over mine and then I'll let Maddie rap about his. So obviously, when you look at this, hbar being a big leader in my portfolio, one of the best entries I ever snagged. Obviously, I was throwing a dart right when I was opening a portfolio position in hbar, and I got to snag damn near the bottom. You see the bear market low was 3 pennies. This year's low was 4 pennies. My average entry was 5 pennies. So that's like an amazing entry, and that gives me a 431% return. Obviously, I like my XRP position. Zcash was another one. You had like a day or a couple days to snag that $15 entry, but it was majority between $18 and $20. I ended up with a $26 average on Zcash that I'm really proud about. What other ones? API 3, Maddie, I'll let Maddie tell the story about API 3, but man, this does not show the complete picture of how I reap the rewards on API 3. Like 14%, I'll let Maddie talk about it because I was very happy with my API 3 position and what it did in the bear market. And then the last one, which is like probably upsetting for you guys to see this, like complete failure of my Casper position. I am down on the position 61%. And, you know, I was very on top of it as it came to the previous local low, and I was throwing the kitchen sink at that. And then towards Q3, Q4 this year, we saw crazy news events, the Casper network, change in leadership, you know, change in the overall decentralized network structure. And so you couldn't, you know, retail responded and started selling a lot, and so I had to catch up and keep DCAing. And at some point, it was just like I'm too far. You know, I'm way too far from being able to keep up with this, and so I just sat this one out. I'm down 61%. It is a 3.8 cent average, which is like pretty remarkable if you knew where the other local low was. You know, if you knew, if you're keeping up with that, 3.8 cents is a great average. But then, you know, some things happen and we started a new low here. And so overall, I'm happy with my portfolio. I'm very happy. 158% is my average total performance. And I'm really happy with that, Maddie. I couldn't ask for a better portfolio. This was my first bull run. So I had to create new positions, unlike you, where you had positions from your previous, you know, bull runs. And so I had a 5 crypto approach here. I locked in with these assets and I was able to add, like, even look, I wasn't even able to keep up with my Casper DCA as it kept going lower and lower and lower. And, you know, this is why, you know, when you're starting out, I always talked about, hey, you got to have a small portfolio size. 5 cryptos is enough. It really is, because I was able to excel with these cryptos, and I'm very happy about it. Maddie, talk about yours and what your overall thoughts, what you're happy about, what you're not so happy about. Give us kind of breakdown of this portfolio right here.
Yeah, sure. So here's all the numbers, guys, right? Like this is the data that's important to me. And this is also kind of how I really just approach like what needs help, where I need to place my attention. You know, a lot of people will be like, hey, you stopped talking about this asset. Are you not interested anymore? Like, no, it just didn't need attention. Like it's almost to the point where when something takes off and it's no longer an area of interest, I almost just stop paying attention to it because it just doesn't need my help anymore, right? Like if we come back and we establish a higher low and it's in a good enough spot where like raising my average is worth it, yeah, we'll revisit that. But like some of the stuff I just almost stopped paying attention to because it just wasn't anything I could actually do anything actionable with, and that being the XRPs and a variety of others. So obviously XRP being one of my, you know, biggest winners here. Also the largest portion of my portfolio represents about 50% of my portfolio. So being up about 360% on the largest portion of my portfolio is very meaningful. So about a 46 cent average. I obviously had entries that were lower than that. I bought through the lawsuit. I bought before the lawsuit. I bought, you know, for a variety of different times. Even before I really even had any more meaningful amounts of money coming through paycheck wise, I was buying XRP. So even if that meant, let's say, $25 a paycheck, I was buying a little bit of XRP, right? So that's really what it comes down to, is consistency. consistency. Now, of course, once you start having more consistent amounts of income coming in, you can be a little bit more effective with it. But nonetheless, average entry is average entry, right? And this is all about ROI. So obviously very happy with that. Zcash being up about 170% right now. And of course, some of these percentages you see are not the highs that we've seen. These are just from at time of recording the current market. So obviously we've actually seen a little bit more performance out of some of these than what we see at current market. So Zcash being up 170%, very happy with that. Average entry $22. This was one of those instances where I have the consistent investor strategy on the website. We talk about all these different scenarios of you can deploy XYZ, DCA versus limit, DCA plus limit, blanket DCA, and we have all these different scenarios. And what I talk about through every single one of these buying strategies is setting aside a 25% dry powder bag each and every time. A lot of people are like, but like that's so much money. Like I'd rather just be in the market, right? And there were opportunities where like, yeah, maybe if I had a little bit more, I would have been happier with that. Zcash was one of those where it just kept going against the market and it just kept tumbling to new lows, and everyone was like, oh my God, privacy is going to get crushed, right? Like Zcash is probably going to go to $6 or $4 or $1 or $0, right? But I didn't see that situation happening. I saw the multi-year lows coming in. I saw that I looked at multiple charts. I looked at there was wicks actually as low as $10. So we technically didn't touch the low, but we're going to call that for the most part a scam wick. And what I did is I took a lot of that dry powder, almost not all of it, and just threw it in there at that $18 region. And I lowered my average quite significantly. So again, you're not always going to get that situation, but I learned my lesson from last cycle and I was very effective with that. So I think that Zcash is still, even at our current market, what are we trading at, 50 something dollars right now? I think it could still be one of the larger surprisers this cycle, just because a lot of people counted out privacy. They don't care about Zcash, and that's fine. Don't care about Zcash. You'll care about Zcash once a few $100s or a little over $1,000. We'll get there when we get there. Obviously hbar as well. That was just an easy DCA for me. There was just a long accumulation range. This is really one of more of those examples of just identifying tops and bottom of accumulation, establishing a tolerance, and then just being happy with DCA in there. Also setting a couple limits at the lows when you saw we were dropping below pivot zones. Very easy. API 3 is going to be one that we have a little bit of a different scenario with. And that's because we identified a trim zone. So we looked and we said, hey, here's an area of interest that market makers left behind when we dropped below the support level. When we got below $1, I cranked up the DCA very aggressively. It was like 150% of what my initial DCA was supposed to be. Once we got back over $1, backed off that DCA to 100%. Once we got over $1.20, completely turned the DCA off. Now, when we got up into that $3.50, $4 region, I said, I'm going to do a trim here and then I'm going to reallocate. Boom, nailed it. Did the two-part exit off that trim and then reallocated. So we see my average entry here is like $1.70. My actual average before this was closer to like $1.02, $1.05, like just kind of depending on the day, right? So that's probably not like 100% accurate my total performance, because I did reap a very nice reward already from API 3. And again, I also have staking rewards from API 3 that I've been cooking up for like over 2 years. So I have a great long-term bag there. So this API 3 performance being, technically down 3% is not 100% accurate. But it is from current, like my current exact situation right now, kind of sitting around break even. So that's, again, very easy when I see the performance here to see where the attention is needed. Casper being down 18% is actually great compared to where some other people's averages are right now, right? compared to this, right? So again, I want you guys to, a lot of you guys will look at your portfolios and you're like, oh damn, XRP is up 360% this year. I should keep adding to XRP because it's doing so well. I do it the exact opposite way. I turn it upside down and I go, what needs my help the most right now? It's almost been an exclusive Casper DCA as of recent. And that's why my average is closer to 18%. We were also talking off stream and I said, if I actually calculated my staking rewards and I said total Casper accumulated versus total dollar spent, I'd probably be right around break even actually if we were to consider that. But I just wanted to keep the numbers raw, and this is kind of the average right now. So I'm like a little below break even, 18-20% down. Again, those staking rewards are continuing to accumulate, and really I don't have to see even crazy high prices to see massive rewards, right? Like a 20 to 35 cent Casper is a massive reward, runs laps around ETH's potential, runs laps around Solana's potential from current market, right? So I'm still very bullish on Casper. I'm putting my money where my mouth is, and you guys can see from my averages that I've lowered it significantly. HNT obviously was one that we also utilized a higher low. So I actually didn't catch the bottom on this. This is not something I bought in the bear market, but after I saw the breakout and I saw there was an imbalance that got left behind in that 350 region, I identified it for the team. I was like, hey, study the fundamentals on HNT, fantastic project, decentralized cellular networks, lots of real world applications now, just not just speculation, and the price is fantastic. Originally it was going to be a swing trade, and the more and more I dug into the fundamentals, I'm like, no, let's ride this a little bit further, right? So I'm still trying to snag a little bit more there, but very happy with HNT performance so far. Now, we have a couple of swing trades in here, and those are going to be Sushi, we've got Mana in there, we've got Velo, and we've got Illuvium. And Filecoin, Illuvium is kind of around break even right now, just because obviously we didn't see the full breakout yet. So, that might be an opportunity to add to. Sushi's up a little bit, like 27%. We actually saw a break over the top of accumulation. So that's a pretty good sign that we're probably going to see some further breaks there. So I'm pretty happy with that. Algo and VeChain were both DCAs during the bear market. So those were things I can just attribute to just being consistent there all around. And I think that pretty much wraps it up for a total of just about a 2x, 102% from current market. So again, some people are like, "Oh, you only did a 2x so far. All that work in the bear market for a 2x, you idiot! You should have just bought the S&P." Which, by the way, if you had bought the dead low of the S&P, you'd be up like 70% right now, which maybe you'd be less pulling your hair out, but it's certainly a lesser reward. But again, we're not counting the fact that Casper has not made its big move yet, right? And that's the thing, is that Casper is a very heavy position for me now, and when Casper does make that move, that's going to make up for a lot of the lack of total performance that we see here. Some of these swing trades that are sitting at break even, Filecoin that I just opened recently, like literally like a week and some change ago, so it's pretty much at break even. So obviously, if we see a nice break on Filecoin, that could really help the portfolio along quite immensely. So you guys can look at all of this here, and you guys can say, "Well, I'm just going to copy paste what Matt does." No. This is, you cannot copy paste at this point, right? Please do not copy paste. One of the things I pointed to on the website is like, we're working on revamping the portfolio reveal section. I was like, even when you see it, don't try to emulate what I have, even percentage wise, because it's not relevant to current market conditions anymore, right? Like if you had been with me the entire time and like every stream, you're like, this is Matt's DCA and this is how he's doing it. Yeah, of course you could do a copy paste, but 99% of the time, that's not going to be where you guys are. You're going to either have your own portfolio or you're coming in at a later point in the cycle. So you need to you can still look at all these opportunities here, because these are all fundamentally sound, ideas, and you can look to see which ones have technical opportunities. But this is not a copy paste plan, and I just want to be very clear about that. You will not emulate this performance immediately by just copy pasting. But overall, pretty happy with my portfolio. We still have plenty of work ahead of us. I might, kind of attack some of these swing trades a little bit and try to, be a little bit more aggressive with them. But yeah, this is what we've been working on for the last few years, guys. And I'm pretty happy with the, very beginning of this bull run here. And, I think this is just the very start of what's to come percentage wise.
I love that, Maddie. That was a great breakdown. Obviously, we have different portfolios. You have a bigger portfolio. You've been going at this multiple cycles now. You have swing trades. I do not. And so I have a 5 focus invested there. And see, it's like so hard to manage. Like I can't even imagine like all these other people that don't have a TradingView account, don't have a CryptoCharged account, aren't staying up to date, that try to manage a portfolio with like an exuberant 20, 30 portfolio cryptos. That is insane to manage, right? And look at us trying to manage these different styles of portfolios here. And even we aren't 100% on top of all of this, right? So maybe rethink that as you go into this bull run here, because I'm very excited, and it doesn't end in this bull run, Maddie. This, for me, is just a stepping stone, and I had to realize, people are at different places in their life, right? So some people I notice within the Discord will be like, hey, after this bull run, I'm buying that Lambo. I'm taking my family on that vacation. And for me personally, kind of like what I talked about at the beginning of the show and kind of what the consensus is amongst my friends right now, is if it's not helping my net worth, then I don't want to allocate my money there. And that's really where I'm at right now. So going into this bull run as a young kid, 23-year-old kid, I'm not thinking about just this bull run. This bull run is a stepping stone for me, all right? Where I go into the next bull run and the bull run after that, I'm thinking about, all right, if I have $1 million portfolio, next bull run it's got to be 10 million, and after that it's like, those are kind of the modeling I want to do, so that after this bull run, when I have that number down, when I'm not modeling anymore, I have an actual number of how much money I made, I can go into the bear market and be like, all right, I'm taking half, I'm taking 75% back into the market, like that. The other percentage is going into a real estate property I want to buy, right? I want to buy a second property, right? But the rest back into the crypto market, right? And so you got to think about multiple cycles here, team, and not think about, hey, this is a great starting point for us. This is so far. Obviously, we're going to have a round out show where we discuss how well we performed this bull run. But it doesn't end with this bull run, all right? It doesn't end with this bear market either. If you made mistakes, you need to get through them. I hear this so often, Maddie, where people bought Bitcoin in 2013 and 2016 or whatever, and then they sold it or they did something weird, and then they didn't get back in the market. For us, it's buy in the bear market, sell in the bull run, and take that percentage of what's left over, reallocate back into the bear market. Or, we're saving 25% of each crypto or most of our cryptos here back into the bear market. 75 in profit, back into the bear market. So we can capitalize over these market cycles, right, Matt? And so, team, I'm just telling you, if you want to be a part of something like that, you got to be a part of the CryptoCharged team because we are future looking. We're not thinking about the here and now. I think you can see by our portfolio here, we strategize and then we execute with that strategy here. That is undeniable here. So if you want to be a part of something like that, join CryptoCharged. I had this quote here, and this kind of like sums up how I want to accomplish crypto. It's a lyric from one of the songs I like. He says, "I'm trying to see so much bread, I got to take counseling." I love that because I'm trying to reap so much reward, Maddie, that I have to literally go to a counselor because I don't know what to do with all this money. That's how I'm trying to, win in crypto land in these upcoming years, right? And so, Maddie, anything, 34 minutes here, team. If you like this show, make sure you leave a like. It's the last after hours of this year. Anything to leave the team with here?
Yeah, I guess I'm going to throw a quote out there too. Mine's going to be from Prof. I moved further from the bank so I could laugh longer. But, guys, I think that one of the things that we demonstrated here is, and one of the things that I think a lot of our team has learned over the last several years, especially, the majority of our team has actually been with us for a long time, which I love. I love that people stick around and they actually want to see it through, is they've learned why the strategy works. Like, it's one thing for me to show you every day on stream, here's what we're doing, this is why we're doing it, and here's the zones, and here's imbalances, and here's all the why this is an area of interest, and this is why market makers want to drive it here, and yada, yada. But when you start to see the fruits of your labor come to fruition, you start to see the results of that, it all starts to become a lot more clear. More than anything, though, this strategy outside of just like the wallets and staking and all this other stuff, everything we teach you guys about strategy and accumulation and portfolio building and, just everything that has to do with the charts is highly translatable into the stock market and a variety of other things. So you can take what we teach you when it comes to crypto and you're like, I want to build a stock portfolio that's, high volatility with smaller capitalization and tech stocks and semiconductors. You can take everything we teach you guys and you guys can take it to other markets. And that's really what I want for you guys more than anything. You guys can ask anyone in our group. I'm constantly in there answering questions. My goal is for you guys to become as self-sufficient as humanly possible and to only continue to subscribe to CryptoCharge because you enjoy the insights and you find it helpful, not because you need us. And that's genuinely my goal. Some people want to keep you as a customer forever just because they want you to have a lifeline and they want you to be dying for that next trade idea. I don't. I want you guys to understand why we're taking the trade ideas and then be excited about the trade idea because you understand it. So if that's something you guys are interested in, you guys want to become self-sufficient investors, you want to be able to take these strategies and duplicate these in other markets, check us out at CryptoCharge. You guys, with code YouTube for the next few days, 30 days free, 50% off any membership. I don't see the downside here. So if you guys still hate it after that, send me an email telling me how much you hate it, why you hate it. That way I can fix things for our program and get more of you guys involved, all right?
I love that, Maddie. Team, this was a great show. Make sure you leave that like if you got something valuable. We covered a plethora of different topics here. I know, Maddie, this background is shitty, and it has to be my new office team. I don't think you quite understand, right? I have to now compete with Maddie. I definitely have to try and compete with Dan because Dan's setup is pimping. So, I'm trying to make headways on that. The Topo Chico is not a sponsor of the show today.
Yeah, you're gonna have to blur that one out, bro. We're not getting paid for that one.
We're just trying to move everything. So 2025 is going to be a big year for us, team. And so I hope you stick around for that. But until next year, team, bye.